Mark Zandi is the chief economist at Moody Analytics. He says no matter how rocky the market's been, it'll be even better a year from now.
Well, I mean, 2021 should be a much better year than 2020, although, Richard, that's not saying very much, obviously. It's been a dreadful 2020. But, you know, it's going to be a tough few months until we get to the other side of the pandemic, get those vaccines, people adopting it. But, you know, if you invite me back and we're talking on this show a year from now, I think we're all going to feel a lot better about the pandemic and a lot better about the economy and about markets.
OK, so let's talk about those markets, because they are at record levels and they are pricing in. They're pricing in the vaccine's effect. They're almost ignoring, you know, Q1 and part of Q2 when we'll still have the pandemic at full force. Does that mean that there's more growth in the markets later in the year, do you think? Or are we seeing it all now?
No, I think there's more room to go up here. You're right. I mean, it's limited upside because the markets are discounting all that good news about the vaccine. But I think once the reality is real, you know, once we can see it, once we all feel good that we are indeed on the other side of the pandemic, I think that's going to provide a nice lift to stock prices. Right. And the end of 2021 should be better than the end of 2020. Right.
But now, humor me for this question. To some extent, the ending of the bull market was something of a technical end of the bull market. You know, in the sense of it dropped because of COVID, but the speed with which it recovered does lead one to suggest that the bull market continues for some years to come. Do you think that's a stretch too far?
No, you know, I think the economy is on fundamentally solid ground, and that means businesses will continue to generate profits and earnings, and, you know, interest rates are low. They'll go up, but because of the better economy. So you mix all that together, and that argues for continued advances in stock prices. Now, I don't think the stock market's going to take off here. I mean, valuations are high. Investors are expecting a lot of good news, but I think there's enough good news that stock prices will continue to advance. The bull market, except for that, as you put it, technical correction because of the pandemic, continues on.
Right. And what's interesting is the search for yield gets ever harder since, you know, government borrowing is so high at low levels. But we're not going to see a rise in interest rates from any central bank this side of 2 years out, potentially, or serious movements. So the search for yield has to be in a market.
Yeah, great point. I mean, the short-term interest rates here in the United States and much of the world are at zero. In Europe and Japan, they're negative. So in that context, if you're an investor trying to decide where you're going to put your money, you know, the stock market, any stock market, particularly the U.S. stock market, looks pretty attractive, particularly, you know, given the gains it's enjoyed over the past year, over the past 3 years, over the past 5 years, over the past 10 years. So, yeah, as long as rates remain this low, and prospects are they're going to remain this low, at least in 2021, that's a very powerful tailwind to all asset prices, including stocks.
You get the last word here, Mark. It's the holiday season. Give me something cheerful to look forward to next year. What's the cheerfulness for next year?
Hey, look, I am very confident.
Good.
When we have this conversation a year from now, we're going to feel so much better about so many things. That's not a hard bar to get over. I feel very confident about that. So I think we should be cheerful and happy about those prospects.